Renting, being a landlord is a terrible job right now. And if you look at Oakland, it's probably one of the worst places to do any sort of real estate business. Rents have dropped 7.2% recently because of overproduction of apartments and condos. And of course, Oakland is just basically a battle zone. If you want to be in Battlefield 4, Oakland is the place to be. It's pretty dangerous, according to a lot of people who live there. I mean, you go to places like Little Saigon, which used to be very tourist heavy. They pretty much say it's like war times. And if locals and business owners say that, then you should probably believe them. So one spiritual organization that owns a huge chunk of North Oakland, half is vacant property. If you check out this, people are saying that the vacancy rates are going out of control. So if you check out what's going on here, the foundation and also people own about 30 properties in the area of Oakland, right? It's really not that bad of an area either. And out of the 30 properties, 15 properties are vacant, empty houses, empty storefronts, and undeveloped lots. And they've been unoccupied for years, but many of the ones that are supposed to be easily rented out and many plots of land that would have easily been built are just completely empty recently, just the past couple years. And we're seeing this situation in many American cities, but what's really worse is San Francisco and Oakland and San Jose are by far one of the worst ones. Even Seattle is still building skyscrapers. Manhattan, even Chicago, still has many new developments in the pipeline. But San Francisco, for example, already canceled 2 massive projects, Hayes Point and One Oak, in their downtown area. So San Francisco basically canceled 2 massive skyscrapers in their city. It's like 40 to 50 stories tall. And many investors don't want to build these because it's an absolute loss. Why would you spend $1 billion on a skyscraper when you could buy a foreclosed skyscraper right next door for like 70% off, like $300 million, maybe even cheaper, honestly. In fact, one of the biggest skyscrapers in San Francisco was sold for 75% off for just a few $100 million. That's an insane loss for the people who originally owned it. So this is happening everywhere. When you have 30 properties and 15 properties are empty, that is not a good sign. And don't even get me started on the Airbnb situation of Oakland. Airbnb in Oakland, yeah, that's basically not happening. Many Airbnb properties in Oakland are now completely empty. Some of the hotter places in Oakland, for example, right here, right next to the Oakland-San Francisco Bridge. This one's actually pretty lit because you have a lot of tech guys that live here. But apparently many of these tech guys are leaving and many of these apartments are also extremely vacant. If you check out Zillow and if you just go right across the bridge, check out some of these higher end units. Look at this, right? You got some pretty insane price cuts going on and many of these homes are not selling. They're on the market for months and months at this point. And don't be fooled. Some of these units may be on the market for just a couple of days, but many times real estate agents just take the listing off and relist it to make it look good. But you get the idea. There's so many units, so many vacancies, and it's just no longer profitable to be a landlord in Oakland. It used to be very popular because around this area, you have a lot of tech workers that live here. But now, tech workers do not want to be here. It's very dangerous to be a tech worker in this area. And people just don't want to be here anymore. We're seeing this in the Bay Area, and it's happening everywhere. City is crumbling, and we're seeing many residents just leaving. Like I said before, 50% of our portfolio is vacant properties. Not that great of a sign. And even Compass, one of the biggest real estate guys in the US, is saying that the Bay Area high housing market is very unpredictable. Places like Florida, Texas, Nevada, they're very predictable because there's a massive population increase. So even though if we go to a recession and prices of properties go down, it will be very wise to buy the dip in many of those cities, if there even is a dip for you to buy. But the Bay Area, on the other hand, is just dipping and dipping and dipping. Oh, 20% off in the past few years? Well, it could go down another 20% in the next few years. So San Francisco's median housing price fell in September. It's falling every single day at this point. And this is a report, like I said before, from the real estate firm Compass. They're massive. The total number of new listings are actually pretty low compared to historical standards, but at the same time, we're also seeing even lower amounts of buyers. Now, many properties in the Bay Area are Airbnb properties. There's thousands of Airbnb properties in San Francisco and Oakland, for example, but we're going to be seeing many of these Airbnb properties going bust. Airbnbs before the pandemic in the Bay Area, people are renting it out 90% of the day. right? Out of 30 nights, they're making money from like 25 to 27 nights. Now, out of 30 nights, they're only renting it out 2 to 3 nights. That's not me saying it, it's from the Airbnb guys. Many Airbnb investors are pretty tired of this. They just can't make any more money. Interest rates are at an all-time high. 30-year mortgage is about hit 8%. This is what we're dealing with. And it's very, very scary to see this kind of situation. We're seeing not a lot of buyers. Mortgage demand from home buyers drops a 28-year low, like 1995 low. Interest rates are soaring. The stock market is doing kind of crap. And we're not going to be seeing any sort of gains for real estate for a very long time. And I think it's mostly because of the feds, right? The feds are just going nuts, hiking at rates like crazy. And let's just see what happens, right? Look at this. Like the Dow Jones drops 300 points. 10-year treasury yield soars to another 16-year whopping high. Office vacancies are also increasing in many American cities, but especially the Bay Area. Look at San Francisco's vacancy rate, absolutely horrendous. The rate of vacancies, was at 30% first quarter of this year, 29.4. Now it's at about 34%. I feel like at the end of the year, we could be seeing vacancies in San Francisco going to 38 to 40, maybe even 43%, simply because many of the leases are ending at the end of the year. And when these leases end, nobody's going to renew it. Sure, San Francisco is getting some AI companies coming in, but that's not enough to reverse the trend of the commercial real estate market. In fact, you could have a couple AI companies going in, but you have thousands of massive tech companies and hundreds of thousands of office employees leaving. And this is causing mayhem in some of the biggest American cities. Apartment rents are also getting cheaper, which is causing many landlords to pretty much get very antsy, because when rates are up this high, you also hope that people pay a little bit more rent so you can actually stay afloat. But now we're seeing many people regretting the decision to over leverage during 0% interest rates, and they're paying the price for it. Apartment rents are now 1.2% cheaper than a year ago. That's pretty bad, right? And we're going to be seeing rents dropping as time goes on. And even in some of the hottest places like Miami, Las Vegas, Austin, for example, places where there's a lot of tech and a lot of people moving there, we're seeing a lot of their rents going down as well. And it's not a pretty sight. And we also can't deny the fact that commercial real estate is by far one of the worst investments to ever make, even right now, with many of these properties in the Bay Area being very, very lacking in quality and tenants, especially. With no tenants, many of these buildings are now being sold for pennies on the dollar. With one of the most recent transactions, infamous, which is Wells Fargo buying a building in downtown San Francisco. It's a very nice location too, for $108 million back in 2005. And they recently sold it for $48 million. That is almost a 60% loss on a building that you've had for 20 years. Imagine that. Imagine having a building for 2 decades and you still lose 60% of your original money. That doesn't feel great. And this is causing many of these big banks and regional banks to get really, really scared about this whole situation. I mean, even high-end real estate pieces, like look at this massive strip here in San Francisco, China Basin. This is a very good location, actually. Many, many apartments and condos here go for a lot of money, and they're selling it, probably for very cheap prices. So thanks for watching, guys. Comment below. Be careful in the real estate market. Like, comment, and subscribe for more.